All right, so today we're going to dive into the ETF marketing wars. They have begun. We'll break it all down for you guys. You will like it. My name is Paul Barron. Welcome back into Tech Path. Before we get started, I want to thank our sponsor, iTrust Capital. If you guys are looking at long-term holding, a crypto IRA is one of the ways you can do that. And the cool thing is you get a $100 funding reward if you just use our link down below. Make sure and check it out. Helps the channel. All right, so let's get into a few things here. I want to go into the topic of marketing and how ETFs will be marketed. I think everybody maybe have seen this, but I'll play it for you guys so you can kind of at least get a frame of what's happening here. Listen in.
You know what's interesting these days? Bitcoin.
Cut. What if we get him?
You know what's interesting these days? Bitcoin. Look for Bitwise, my friends.
All right, so I don't know if we just played that, but the point is that Bitwise obviously ramping up their marketing plans. And interestingly enough, this is being done prior to the actual approval of these ETFs. So that I think is going to be the factor that plays into this. Eric Balchunas kind of hits on it. Early shots fired right there on Bitcoin ETF marketing war. Good ad, in his opinion. Short sweet, kind of avoids the ticker, which you can't do, but yet if you know, it's definitely about Bitcoin, which again, this is one of those things that I think we'll see more of. I think the question will be who is the most creative around the marketing component. We actually did a video with James Safer not too long ago. I'll play a clip from that interview that I had with James, and we were talking about this very issue. Listen to market. Very interesting. One other area that we've been watching pretty closely, obviously as a media company, is we work with a lot of agencies. And I've noticed in some of the year-end spins that they do, they come in and they'll do these big meetings with us, and they're looking for their 2024 cycle. And we've had a couple of agencies come back in and look for inventory of ad insertions toward the end of this year, which is unusual. I mean, we don't normally see those kind of requests. Normally it's like, hey, we want to start this in January if it's a fiscal year kind of media product that somebody's got. So I'm just wondering if there's somebody coiling up something here for a marketing run.
Are you saying asset managers are looking for ad space before the end of the year?
Well, I won't tell you who's asking for it, but I will tell you that there are agencies that are highly close to people in the industry that are saying to us, what do you have in inventory in late November, early December? And I'm like, what's going on? What's going on?
Yeah, this goes back to like one of the notes we wrote in basically August was like, we think these things are going to get approved, which a lot of people, even then, were disagreeing with us. Now we're kind of like, that's the consensus opinion, which is nice to go from out of consensus to in consensus over a few months. But one of the things we wrote was like, be ready for this to be a marketing bloodbath. Like
exactly. All right, so I think, the point being is will the marketing bloodbath, so to speak, really make a major impact on crypto in general, especially around Bitcoin? What do you guys think? Do you feel like, these kinds of early moves toward the end of this year, next 10 days, could accelerate, or do you feel like this is kind of just a one-off? Let me know down in the comments. I'd love to get you guys' feedback on this because it's going to get interesting for sure. Another thing that was happening over the weekend, this, of course, was VanEck CEO expecting Bitcoin's price to hit an all-time high in the next 12 months. Another major Wall Streeter
Bitcoin already made the big gains and now kind of treading water.
No, because it's growing up. Like I said, it's like a child that's growing up. And so you can argue about it being a bubble. And what I say is no bubble. So it bubbled in 2017, but then it hit all-time highs in 2021. So nothing has ever been a bubble that then has outperformed itself. And so I fully expect in this cycle, and you have this halvening thing happening in April, which is great technically for Bitcoin. I expect all-time highs in the next 12 months.
So you guys.
All right, so you can kind of see it there. I think everybody's looking at this right now. I'm always worried about when, it's kind of like the 10th man concept, but when everybody is pointing at this one direction, just being able to be aware that there is a possibility that this could get a denial. And if that does, that could have major implications on crypto. I think in general, around all the markets, this may have implications on traditional markets. But obviously, we'll see how this plays out because you've got a lot of things really kind of boiling down to a couple of scenarios. One, it gets approved. And if it does get approved, what would be the impact on crypto? Now, one sector kind of looks at this in the sense that spot coin ETFs could be a bloodbath for crypto exchanges. And this is where fees get into it. And I think this is something that we have to also pay attention to, is that the exchanges are either going to have to get super competitive or possibly see a large amount of not only people migrating over to these spots or new traders coming in and not even going the exchange route and simply going over to a spot ETF option. So there are some things that really I think people need to pay attention to there. This was according to Gerasi. He basically says retail spot Bitcoin ETF buyers and sellers will benefit from the institutional trade execution and commissions. On the other hand, retail users of crypto exchanges will get retail trade execution and commissions. So that is going to cause the issue around fees. And I think this is good at the same time because it's competition. And I think that's the thing that everybody's kind of focusing on. Once approved, the spot ETF will create more price competition in the crypto industry, bringing back money back to investors from exchanges that spend massive amounts of cash to advertise their services, like on Super Bowl, et cetera, that we've seen. It would also be the last crypto Super Bowl if they launch an ETF, because ETFs are such a thin, rough industry that maybe the exchanges would be really kind of in a position where they could not go in that advertising direction in the future because they've got to thin down their margins. So I don't know, that would be an interesting play. But I look at it this way. Remember, Bitcoin is only one of these factors around ETFs. I think the bigger scenario that plays out, especially for Coinbase, is what's going to be happening very soon from a legal standpoint. Within that also, because there's also ETFs around Ethereum. This came in from James Seifert, basically updates SEC going early on the delay orders with hashtags and grayscale ETH ETF filings. These were due on January 1st. I don't read too much into this because I would agree with James. I think it's just, they're clearing the queue before holidays. They don't want to have to deal with this, right now. Everybody's leaving versus having somebody on kind of final watch to be able to ready to get this done by January 1st. So I get that, understand that for sure. Giancarlo, we've had him on before. This is the former CFTC chair. And he hits on two key points here around CBDCs, because I want to kind of jump to the CBDC side of things. And one of the things that really, when you think about digital dollars and the Bitcoin ETF all coming at the same time, listen to what he said on Bloomberg this week. Let me play this clip for you.
The United States doesn't need to focus on whether or not to deploy a digital dollar right now, but it must take a leadership seat at the table that is today deciding what these digital networks of value, both sovereign and non-sovereign, are going to look like, because our economic competitors like Europe and our economic adversaries like China are at the table right now. And in China's case, they want to ensure a digital future of money that is safe for surveillance and safe for censorship. We need.
All right, so you can kind of see the fact is that the globe is already in line with where digital assets are going to fall, and also what currencies are going to look like from a central bank digital currency standpoint. And this gets back to the whole issue that Giancarlo is hitting on. Now, one thing that kind of backs that up is this right here. Circle has added Solana to a list of chains used by the Euro coin. So this is going to be a factor that also increases, I think, in awareness, but also in use case. A couple of things here is the EURC is well positioned to enhance utility across peer-to-peer transfers and obviously European remittance corridors. So this is just around fees, I think, are going to be a factor here. Circle also said apps like Jupiter Exchange, Matora, we've shown and talked to you guys about these here recently. Orca and even Phoenix are ready to support Europe's stablecoin, the EURC. As well on Solana. So that also just advances that. Now, Giancarlo goes on and says some more interesting things within this same interview. Listen to this clip right here, because this gets into a little bit more depth here.
It was on that Bitcoin futures market that the SEC greenlighted an ETF. Today, we do have an ETF, but it's based upon the Bitcoin future, not based upon the spot market. What we're talking about here is greenlighting an ETF on the spot market. Thus far, the SEC has been unwilling to do it because the spot market is actually outside the CFTC's jurisdiction. Long story, which I won't go into now, but it's outside. Congress is toying, and there's some bills that would give the CFTC oversight of that, which would make the SEC's job much easier. Now, having said that, there's a lot of reason to believe that the SEC may be getting ready for an ETF on the spot Bitcoin and Ethereum markets right now. And if we look around the globe, Canada's already done it. Germany's done it. There are other functioning markets that are healthy, that are well regulated. And so I think there's very good arguments that the SEC should, and I think there's anecdotal evidence that they will greenlight that product.
All right, so a few things there. Obviously, this is the former CFTC chair. Interesting statements that he made there in reference of where Congress might be aligning this up for approval around ETFs to fall under the guise of what the CFTC has done, especially around spots. All of that definitely, because that could flow into, I don't know if this would happen in time for an ETF around Ethereum, but the point is that even he, this is an insider, been around this for quite some time, Christian Giancarlo, even he is also pointing at the probability of this happening. So still kind of pointing in the right direction for an ETF to be actually approved. Now, as I said, just be cautious with that. Be aware. Watch early January very closely, especially on that January 8th day, because I think that's going to be a key day. That's a Monday. It's right in between the window. Could happen on that Friday. Very possible, but there's that window in there that where if this is going to get approved, we'll know. Time is ticking now, guys. So we're going to see if Bitcoin actually gets an ETF. I want to kind of move along here, but I do want to thank our sponsor, and that is Tangem. If you guys want to get into self-custody wallets, one place to do it is with Tangem. And this is an actual card that you guys can use, and it is used with an app that is a really slick app. All you have to do is download the app right off the iOS or the Android store, and you're in. Jump over to Tangem.com, and then you go over to the 3-card set. Very simple. Get that one because you can carry one with you. Keep another 2 of these others kind of in safekeeping. So it just makes it a little easier for security. But anyway, check it out. Use our link down below. It does help the channel, and it's a great self-custody wallet for you guys to take a look at. All right, so I want to kick off here with Coinbase. Now, Coinbase, of course, is in the throes of dealing with what could be a very positive news with an ETF, but also what's happening within their own court case. And this is Brian Armstrong tweeting over the weekend. Nice small win. We went to court to challenge the SEC refusal to create clear rules. It worked out. Court compelled them to respond, mainly because they just said no, because that's how they came back. But I think what Coinbase was trying to do was force their hand to actually say no. Then an actual lawsuit can be enacted and Coinbase can get in front of a true scenario here from a legal standpoint to be able to try to beat this. So now that they formally responded with a no, we can challenge their response in court, which helps us to get a step closer to regulatory clarity. So I think this is falling into the hands of where Coinbase is wanting to go. And you had Meta Lawman, who is back on Twitter, by the way. So welcome back, Meta Lawman. Go follow him on Twitter. 30 days until the hearing on Coinbase's motion for judgment on the pleadings. If Coinbase wins, it could be a total rebuke of the SEC's regulation by enforcement campaign against crypto. And of course, Ripple case was enormously consequential in this. This one is for all the marbles. I agree with Meta Lawman on this. This is such a huge factor. Even if we were to get a denial, if this were to get done, it would be enough to move the markets in a big direction. If we get a approval and we get a potential, decision on this motion to deny, this changes the game quickly for crypto as a whole. And I think it also brings the U.S. back to the front of the line in terms of activity, innovation, and what we might see in terms of things going forward. The other things that kind of hit on this, Coinbase, this is a huge deal. Coinbase says now crypto industry has raised $78 million to support political candidates for 2024. 78 million, that's right now. So my anticipation is you're probably going to see a lot more fundraising. This could get over $100 million going into the lobbying coffers to basically get candidates supporting crypto in general. That is huge. One of the points in the article, future of cryptocurrency in the U.S. hinges on the election of candidates and the enactment of policies that support responsible and fair rules. Totally agree. And I think we're already kind of seeing this just in the number of politicians that are playing into this. Crypto lobbying also has ballooned over the past few years. And federal lobbying spending from crypto industry was more than double in 2022 than the year before. Imagine what this is going to be in 2024. We'll really have a lot of campaigns to be able to get into. That, I think, is huge in terms of the future of crypto. It still falls on legislative fronts for sure. Back to my point with Coinbase, because if you're investing in Coinbase, one of the things that you have to think about is this whole battle that is going to occur around fees. It's going to get very, I don't know that it's going to get heated, but I will say that we're probably going to see a lot of interesting marketing models. This is the fee structure for Coinbase right now in terms of their pricing tiers on takers and maker fees. And I think this is going to be one that will get hit most. So with that being the case, maybe Cathie Wood is seeing this as a problem for Coinbase as a whole. I still look at Coinbase really having just as much, if not more traction, if they get their approval through courts, simply saying, hey, they're not selling unregistered securities. And if that is the case, then I think the volume is going to fall to the altcoins and all the other assets that we see out there within Coinbase. But of course, Cathie has sold another 59 million worth of Coinbase shares, 15 million of GBDC last week alone. So if you look at Cathie's arc, and you could look at this two ways. One way is you could simply say, hey, Paul, she's just selling the top right here. I mean, obviously, Coinbase continues to fly up the charts, and she's just taking profits. If you look at when she was at the number of shares she's holding right there at 8.5 million shares, really, you got to go back here in this zone, which was really around January of this year. So all of that has been acquired and risen, because you got to remember where Coinbase was around $33 back then in January, where now it's trading in the high 50s or low 150s to high 140s. That's a pretty impressive roster. So I think it's more of just a profitability issue kind of taking place here. I don't necessarily think she's too worried about what Coinbase's business model is going to be. Last up here I want to hit on is Kobe Slater kind of dropped a couple of things here. And some people may look at this, and again, it goes back to the whole point that we've talked about here on the show quite a bit, and that is don't get caught up in these scenarios where there's just so much FOMO. And fear and greed index hit 76. This is extreme greed. First time since 2023. This, of course, off the heels of the FOMC meeting last week, where Powell pretty much gave the green light. We're going to see some rate cuts. So everybody's kind of front running this. S&P now up 650 points since October 27th. That's crazy. And then there's a 16% rally in 36 trading days. That's like 18 points higher per trading day. So another big advantage. All of this in perspective, median annual return for the S&P 500 is normally around 10% per year. So you can kind of see we're already approaching potential doubling of that just after a little over 36 days of trading. So this to me gets back to the point of cautious. Anytime you see this much activity moving in the tertiary markets, like what we're seeing right now, especially toward the end, you're always wondering, is there a dump waiting to happen? And could the ETF, a potential denial, actually trigger that in a big way, especially in the digital asset space? So you just have to be cautious out there, guys. Just be very cautious. Have your hand on the trigger in a position. Everybody's different. Everybody's portfolio is going to be a little different. Maybe you're looking at this and saying, it doesn't matter really, I'm in for 5 years. I see this as the future of assets in general. So that's a different kind of play versus those that are out there doing swing trades and things of that nature, or short-term trades in the next year or so. So think about that. All right, if you guys are not tuned in to the Diamond Circle, make sure and get in on that. All you have to do is click the link down below. It gets you into our Diamond Circle. We have additional podcasts over there. We have more analysis, stuff that doesn't make it here to YouTube. And it's also our community. It's where we drop additional news, all sorts of stuff over there. It's a great place to join. So click that link down below. Catch me out there on X, @Paul Barron. We'll catch you next time right here on TechPath.